yes.
will give me $250,000
Yes.
as the variable cost
It's a variable cost, yes.
for 1,000 units.
Yes.
So that's for 1,000 units. So if this is the variable cost for 1,000 units,
Yes.
and as per the question, this is the total manufacturing cost for 1,000 units.
So that's the total variable cost.
Yes, no, it's the total manufacturing cost,
yes.
which is a combination of
Yes.
variable cost and fixed
variable-
cost.
yes.
So I would say total manufacturing cost
Yes.
is equal to your variable cost
Cost
plus fixed cost.
fixed cost, yes.
So it means this $400,000 is a combination of your variable cost,
which is 250,000.
yes, and your fixed cost.
And your fixed cost. Thank you very much.
So what is the fixed cost?
So the fixed cost is
This-
150,000.
Absolutely. This takeaway, this gives you a fixed cost.
Excellent.
And to verify that, we can play the same thing over here.
Yes.
So you
Excellent.
multiply 1800 with 250,
Yes.
you get the variable cost for 1800,
Yes.
you take that variable cost out of 600,000, you
Yes.
again come to 150
Fantastic.
because fixed cost remains fixed.
Thank you.
No problem. And this is what we have just said. So we got variable cost taken out from the total cost,
Yes.
gives you a fixed cost. Similarly for this one, we got the fixed cost, and fixed
Excellent.
cost is same.
Yes. I get that now. I'm sure the students would have got it quicker than me.
Yeah, because that's only the bit, once you have understood that part, it tells you that you've understood the basic concept of accounting, which
Yeah.
says the difference between the variable cost and the fixed cost.
Yes, excellent.
Right. So moving forward, we have to understand the two methods we'll be looking at. So we'll be looking at marginal costing, which is also known as variable costing.
Yes.
And it says only variable manufacturing costs are charged to product costs.
Yes.
As we just said earlier, that we understood what is a product cost, and we
Yes.
said anything you can associate it with a product.
Yes.
The product itself is a product cost.
Yes.
Otherwise, it's a period cost. In marginal costing, they said variable manufacturing cost, so your raw material, your direct labor falls in the category of product cost,
Yes.
whereas your all fixed costs are treated as period cost.
So presumably we have to know exactly what the variable cost titles are
Yes.
to work out the variable costs.
Absolutely. So mostly in most of the questions we would see that they are the direct material, the direct labor, and in most of the questions they clearly tells you that this is the variable element and this is the fixed element.
Yes.
So we'll be looking at some practical questions to clarify on that side.
Excellent.
But for the time being, we just have to understand that for for marginal costing, we are concentrating on the variable costs as
Yes.
product,
Yes.
whereas we're treating fixed costs as period cost.
Yes.
But when we go on the absorption costing, so before moving there, just a quick, like you just said, that
Yes.
we should clearly know
Yes. Excellent.
which are variable,
Yes.
which are
Yes.
fixed. Here's a category.
And the reason because as the question states, we're trying to ascertain what marginal costing
Absolutely.
is. And as Shavita's just told us, that marginal costing is looking at the variable costs.
Yes, but we are looking at more of variable on the manufacturing side.
Right.
So focusing on the manufacturing.
On the manufacturing
end,
side.
Yes.
Okay.
So if we look at the product cost for marginal costing, we'll be looking at direct material, direct labor, direct expenses, and manufacturing overheads that are variable in nature.
Yes.
When we look at the period cost, we'll be looking at fixed manufacturing
Yes.
and anything which is related to non-manufacturing, which is your admin,
Yes.
your sales, your marketing, that all comes
Yes.
under your period costs.
Yes.
So that's the four main elements we'll be concentrating on
Yes.
for marginal. Moving forward, we'll be looking at absorption costing. And absorption costing also known as full costing.
Okay.
So anything relating to manufacturing, if it's variable, if it's fixed, they all are treated as product costs.
Okay. So absorption costing
Yes,
in relation to manufacturing
Yes.
combines both variable and fixed costs.
absolutely.
Okay.
Absolutely. And rest all, which is non-manufacturing, either variable or fixed, that comes under your period cost.
Yes.
And that's another difference. So again, looking at the similar classification, and here you can pinpoint the difference between the absorption costing and margin costing, because when we looked at marginal costing, we have this element there, direct material, we had direct labor, we had direct expenses, we had variable manufacturing overhead. It's only this part, the fixed manufacturing overhead, which was treated as a period cost in a marginal,
Yes.
is treating as a product cost in absorption.
Okay, just say that one more time.
Yes. So again, when we look at absorption costing,
Yes.
and we are looking at the product and the period costs,
Yes.
and we said that anything that is related to manufacturing,
Yes.
doesn't matter it's variable or fixed,
Yes.
will be treated as product
Yes.
cost. So we are taking direct material, direct labor, direct expenses and variable manufacturing overheads,
Yes.
which are already there when we're looking at the marginal side.
Yes.
Only this element, which is fixed manufacturing overheads,
Yes.
that is the only element that has been added
Yes.
to the product cost under absorption
Because
costing.
the main difference between absorption costing and marginal costing is the fixed costs.
Yes, and it's only the fixed manufacturing
Manufacturing cost.
That's it. Because non-manufacturing will still stay here.
Yes.
Anything related to admin, marketing, everything should remain here. It's
Yes.
only the manufacturing part
So
that varies.
the fixed
Manufacturing.
costs
Yes.
and not all the other ones.
Not all.
Hence the reason why you showed us the first slide in
Yes.
terms of prior knowledge.
Yes.
Yes.
So we have to clearly understand if it's manufacturing. Again, what's manufacturing? That's related to the production of the product.
Yes.
So again, giving an example, coming back to the point where we said that we are looking at the bridal dresses. So anything that's go into the making of dress
Yes.
will be my manufacturing.
Yes.
It could be the rent of the building,
Yes.
the electricity charges, everything.
Yes.
They are fixed in nature, but they are related to the manufacturing of the dress.
Excellent.
They'll come in here
Yes.
for absorption cost.
Yes.
Looking at the period cost, it's again your non-manufacturing, either variable or fixed, come under
Yeah.
your period cost. It will be more clarified when you
Yes.
look at the practical questions of
Yes. But we're not really going to be using the period costs, are we? We're going to be using the product costs.
it. We will be, because when you look at the net profit
Okay.
side,
Yes.
you have to take out the admin costs and you
Okay.
have to take out
Yes.
the marketing cost,
Yes.
and only then you reach to the net profit.
Okay.
So we'll be taking them out.
So I'm jumping the gun a little bit.
No. But that's what we're trying to say. Yeah.
Sorry.
Downstairs.
What is it 101?
Yeah.
Okay. I was going to ask you.
Sorry, we're
Sorry.
videoing. Could you mind?
Sorry.
Sorry.
Go on.
Yes.
Right. Okay, so we got some practical questions here, and before I start doing this question, I just want to make one thing very clear to understand, that if we have produced something and we have sold all of it,
Yes.
if I produce income statement under marginal costing or I produce income statement under absorption costing, the answer gonna be same.
Yes.
Because what you're going to realize after this session, that if we really want to understand that where this marginal costing and absorption costing makes the difference, it only makes the difference if we have something being manufactured but not sold
Yes.
as a closing stock,
Yes.
or we have an opening stock from last year.
Yes.
So that's the only two bits where the statements makes the difference.
Yes.
But we can clarify on that once we start looking at the examples.
Could you say that one more time, please?
Yes, I'll do that. What I just said is that if we are understanding the difference between the marginal costing and absorption costing, the best way to understand it, if we have sold everything we have produced, no matter what statement we are looking at, which method we are looking at, the answer gonna be same. It only makes a difference in answer when we are looking at either having a closing stock and or having an opening stock.
Because one method it means having just a variable cost of manufacturing,
Yes.
and the other method means incorporating the cost of the fixed and variable costs in relation to manufacturing.
Absolutely. And that's the biggest difference. And that's what we have to understand. So moving forward, it says a manufacturing company produces a single product. During the year ended 31st December 2009, 10,000 units were produced and sold. So whatever they have produced, they have sold. There was no opening stock. The cost of manufacturing during the year, they have given you the cost, and at the very end it says all the 10,000 units were sold at $200 each. And they're expecting you to make an income statement based on marginal costing and absorption costing. Again, if we go through the costs, we said there's direct material, variable cost, direct labor, variable cost, variable manufacturing overheads, again the variable cost, fixed manufacturing overheads, they are fixed and they are related to manufacturing. Variable selling overheads, they are non-manufacturing but variable in nature, and fixed selling and admin overheads, which are fixed in nature but they are again non-manufacturing.
Non-manufacturing, yes.
Yes. So these two items will be treated as period cost in both statements, whereas these three will be treated as variable cost in both statements. It is only this cost, which is fixed manufacturing overheads, which will be treated as a product cost in marginal.
In marginal, whereas
and
absorption, it won't be.
Yes. So we're talking it other way
Yes,
around.
yes,
So
yes.
in marginal, this will be treated as a period cost,
Yes.
whereas in absorption, it's going to be treated as a product
Yes.
cost.
Yes.
So that's what we are looking at. So quickly looking at the statements, I'll just take them. What they have done actually here is they have combined the first three elements. So direct material, direct labor and direct